Hi, Warriors. How's everyone doing? AJ, Ingmar, hi, Brand, Michael Bergman, everyone. So,
Good morning, Coach.
hey, Blake, I heard that there are people from the BOJ that have been watching F.A.C.E, and that's why they decided to launch some intervention on turnaround Tuesday.
That is that's a really, first of all, that's a
morning or
yeah.
not.
I was going to say
not
before.
at all.
Yeah, wait, hold on. Before I was going to say before we talk about that, I think Kman has some things to say about that, but I need to mention just a few things. Obviously, we had some big moves with the BOJ yesterday, but more importantly, not more importantly, but also I just wanted to mention, Dale, in 15 minutes we have the ADP jobs data. We have to cover that live because that's what the market is really focused on this morning. Oh my God, I can't even speak. So Kman,
It's all right. I pay attention to what the market wants, pays attention to.
Did you just say fark it? That's what I said.
Yeah, I know. That's kind of combination of profanity and market.
Yes, sir.
All right. So anyway, so Kman, why don't you talk to us about the BOJ yesterday? If my memory serves me right, it took 3 interventions last time, right?
Yeah, well, first of all, yesterday I already mentioned in the chat room, I said could be, and I said leaning towards perhaps a light intervention, but the price action did not really support it, a big intervention. And then there was a lot of speculation, and I already said, listen, this when people hunt down, or when we do a barrier, that can unleash quite some flows. Now, I'm not saying that the Bank of Japan never checked rates, but if that would have been the case, some of those Japanese mega banks wouldn't have been able to shut their mouth, and we would have known it already. And then the last piece of the puzzle that came up is that apparently the money market flows of the Bank of Japan yesterday showed no move at all. Now, there is a question around that. Does those money market flows reflect FX flows the real day after? Because FX flows trade under 2 days value date. So I'm not sure whether those flows are really reflecting it. But when I look at this, the way this move goes, it looks to me like there's been a big flow unleashed after the barrier, and that just put all the algos, all the e-commerce buckets, overloaded them, and they had to sell. And they don't think where they need to sell. They just sell if they need to sell. And then the market being long, especially after the jolt as well, I think that created this whole mini crash as a snowball effect. And I'm going to stick to that, really, unless intervention is really proven now.
I'm going to stick to the fact that last week I brought up that huge down day that we had in silver, from being a buck higher to lower this day. And I thought to myself, is this kind of a foreshadowing of some of the structural stuff happening in the market that a lot of smart guys talk about? And so this was incident 1, and this looks like incident 2. It seems like every once in a while people just step away, or there's no liquidity. So I mean, that's 2 weeks in a row. One thing like that in silver, you go, okay, just an aberration. But here we are the next week, the same type of thing happening. What do you think?
It overflows, and look what happened in silver the same day. It first rallied $0.50,
right,
and then it lost $1.50, and then, but that is probably not due to a barrier, but rather liquidity, and but the overload, and I think yesterday, dollar yen is I'm now 90% convinced it's a mini flash crash where the systems were just overloaded, and they had to get out of positions, dragging all the stops in between, because the people were long dollars. 150 just got broken, and the people were buying dollars on the jolts. So yeah, I'm really going to stick to that. I say 90% sure that there was no intervention.
Okay. All right. So to me, it looks like bids just disappeared. And that's what happened in silver. Anyway, I think we'll have a day like that in the S&Ps one day. Anyway, you guys want to talk about this bounce that we're getting in cable, Rhine, and Euro? Yesterday, the turnaround Tuesday trade was to sell the dollar. It worked.
Yeah.
What do you guys think?
Sure did. Well, if you look at cable, we had a barrier at 120.50, and despite intervention, dollar strength, we couldn't break that yesterday. And then first thing this morning, we broke it by 13 pips, flushed the barrier, flushed the stops, and then rallied 100.
Okay, you think that's about it?
See that little wick? Boom.
Yeah.
Flushed the barrier. Couldn't do it yesterday. Flushed it this morning, and then we rally again. Dead cat bounce, perhaps. You know, we're not taking off. Dollar yen, euro dollar, sorry, got above, as you can see there, 105. That was a key level. If it holds that, maybe we have, you know, a bit of a stronger bottom down there. You know, it's same with all the other. It's a similar picture again with all the other pairs. You know, Kiwi holding that low.
Yeah, it held.
You know, we spoke about it
so
yesterday.
far.
Held that low so far. Aussie dollar held. You know, it's had that held that trend line. You know, you've been looking at it. Give or take a few pips, you know, it's not breaking and holding below. So it's a bounce against the dollar. Does it change anything right now? No, we're not even close to any fibs of some of these moves. So
well, the dollar was 107.20 was halfway back.
Yeah.
Yesterday. Okay, so there, you know, that's an important. I don't even think 50% is considered a fib.
It is not a
retrace.
Fibonacci. It is not. It's just a retracement. But it's also channel resistance too. If you look at look at the weekly chart, and you got how many weeks? 10 weeks, 11 weeks of straight up?
12.
I mean,
it's a record.
Yeah, it's literally at channel resistance as well. So
okay, you want to grab them, Blake?
I will, because we got to talk about the F.A.C.E, right, Dale?
Yeah, the F.A.C.E and some of the news coming up. So
yeah. Speaking of which, so Ryan, real quick, any other like major headlines that you from like the ECB? We had Lagarde, she was speaking, and the comments that I read sounds like we're pretty much at peak rates in the Eurozone. I mean, it just seems that way, right?
Yeah, nothing from her, just a repeat of all the last ECB meeting and every comment since. Rates are restrictive, blah, 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 blah. So nothing. What we did see, though, was a bit of an improvement in the PMIs. Even Germany moved surprisingly into expansion. And we know how bad things have been there. A lot of the PMIs, the services side of things, picking up a little bit. None of them really moving into expansion, just less crap than they were last month, or rather than the flash number. So,
well, I mean, that's we're back in expansion. That's good, right?
Just for Germany, yeah.
Yeah, well, yeah. I mean, I'm sorry. I was just looking at this piece of data right here. I was like, well, that's good. it's better than the other direction, right?
Yeah, that's still contraction. You know, but quite a move up, because those, like that Germany number, those are all the flash numbers in the middle. So they went up on the flash and then they went higher on the final print. So it's good news. But as you can see, 44.4 for France isn't good. Spain's okay. UK moved up as well, but still below 50. But you know, small wins are small wins. If it becomes a trend, then maybe, you know, recessions get averted, or we see a tight Q3 and a bit of a rebound in Q4.
Yeah, I mean, UK data is a little bit better than expectations. That's good. That's good. So real quick, we got just about 6 minutes until the data comes out. I was just thinking off the top of my head, there was just something else that I wanted to discuss, and I totally forgot. Dale, that's what happens to us too early in the morning, right?
maybe it was a 4,200 number in S&Ps.
Maybe it's McCarthy getting the boot.
Oh well, yeah, McCarthy did get the boot. That's an absolute disaster crap show. And you know, it looked like that was going to be the case. Oh, you know, yeah, the S&P 200-day moving average. This is really key, I guess, right here. I want to show you guys a few things. So we had this triangle developed yesterday. You can, you know, see it here. Let me just show you what it looked like ahead of time. It looked like this. You know, there's your triangle. This is, you know, whoops, that's wrong direction. This is what it looked like yesterday during after completion, right? And this is what it looks like this morning after recovery. You know, we hit the 161% extension. You know, we just were looking at it all the way around. Just the 200-day moving average, really key support. And you're right. You know, the S&P is here. This is that quad confluence of support, channel support, breakout level, long-term 38% retracement, 161% extension. Everything's just kind of happening here. Now, one of the things that's going to allow for a continued recovery in the S&P, I think, is going to be the yields. And you can see 10-year yields are finally breaking, you know, pulling back. Now, this is a daily candle. We got a lot of time left in today, but that's a nice little shooting star that's developing. And if you look at the dollar index, and this is the one chart I want to show you guys, the dollar index, just kind of, I want to expand on it. This is because of yesterday's you know, move that we saw in the dollar yen. This is going to be a head and shoulder pattern that is working intraday. Now, it doesn't disrupt the bullish nature of the dollar index. It's just it shows that the retracement in the dollar can be a little bit further before we start resuming that uptrend. So now you got to start looking at a neckline. Like, let's say the data is all right today. Just because the dollar rallies back, or we get a snapback rally today, post ADP data, can it sustain? And I think you should be watching the dollar index and see if we can get back above 107. Because if we get it back above 107, we're off to the races again in the dollar index. We're off to the races with yields. And that means, you know, stocks are going to come back under pressure. But we've hit a lot of support levels. One of the things that also freaked me out a little bit, and I think we're going to have to watch this one. Dale, I don't know if you saw this. Here's the Nikkei, and we broke below.
Yeah, I talked about it yesterday in here.
Yeah, but the thing is, you did. But the thing is, we're continuing that breakdown. So this is the one thing that makes me a little nervous about risk, because there's so much money parked in Japan right now. I mean, you know, all the money that's not in the U.S. is kind of over in Japan, or if it's not in Europe, it's in Japan right now. So this is the one thing that has me really worried about, like, risk appetite. So I'd like to see a recovery in the Nikkei. And you're right, you brought it up yesterday, and we're below where we should be.
Yeah,
so
it's not a flag anymore.
No, it's not a flag, and it's below the breakout point. So that's a little scary. But anyway, we do have just a few minutes. Let's see, we have actually 1.5 minutes before data comes out. So what I'm going to do is I'm going to take it over to the dollar index. We're going to keep the dollar index right here on a 15-minute chart. I'm also going to pull up the S&P right in the middle here with the 15-minute chart. We can see yields over here, see what the response in yields will be. I don't know if we should really put the dollar index. We'll just leave it in the dollar index for now. Let me go over to ForexAnalytix. I'm going to pull up the data flash so we can have that data ready for us when it comes out. Here's the ADP data. Let me move that over.
I might look at dollar yen, because that's going to be the interesting one. If it's good data, and it needs to be a good strong number, we need to see what happens in dollar yen. I think rallies.
I'll go with that. Yeah, I'll go with that. I'll do that. So we got dollar yen to the left, S&P right in the middle, yields to the right, and jokers to the left. There's also and or is it jokers to the right, Dale?
I'm not sure, bro.
Yeah, jokers to the right.
Is it jokers to the right?
All
right.
To the left, jokers to the right, and here I am.
There we go.
In the middle of you.
Few seconds. Here we go. I was grabbing a drink of my coffee too.
Low 89.
Whoa. Hey, here comes yields are going to come down. Dollar index should come under pressure. S&P is rallying. Look at that. It's like somebody in Europe already knew what was going to happen. Holy cow. All right. Well, let's see what's happening across the board. We have the euro continuing its recovery. Now, here, this is going to be really interesting, the Aussie, because this is the previous channel support. Let's see if we can get back above here. But nice recovery in, the Aussie, the cable. We were at the 50% retracement. 618 comes up at 121.85 roughly. Dollar CAD has not moved much, but we had this big conversation about the dollar CAD right up against resistance. I think subjectively, we're right up there. And dollar Swiss is pulling back. And by the way, the dollar Swiss is at wedge support after the false breakout. So if we break back below 91.50 here in the dollar Swiss, we might see a much bigger move lower. One of the other things that one of the other shorts, Kman and I in the ForexAnalytix chat room, we just started selling. Well, I just sold it about 1,500 pips ago. Is the EURMXN. Now 1,500 pips doesn't mean 1,500 pips. It's like more like it's like a 30 pip move. But Kman, what are your thoughts here on the EURMXN, and why should we continue to fade this bad boy?
Yeah, it sounds good when you say 1,500 pips.
Yeah, right? it's like 30 pips. That's
no, actually, it's nearly 1%. This exactly what you're showing there. Those prior highs. We had the break on the fierce risk-off moves. We had the break above that 1870-75 zone. Several trend lines there, but the prior highs they're now capped and. Also a little bit saying that things have perhaps ran far enough for now. I was talking about the yields as well in the flow show, and it could be that if you look at it economically speaking or whatever, and if you look left really into and after the GFC, the 30-year, for instance, has tagged 5%, and it's now starting to come off. The 10-year as well. Close to 5% and starting to come off, and we'll have to look at what the spread will be between the short and the longer end, I reckon. But it's looking at the moves that we had. There's room for a bit of retracement, right? On both yields and actually the dollar, perhaps.
Yeah, I mean, I guess if risk continues to recover, you're going to get traders and institutions inching their way back into some of these carry trades, and this is one of the biggest ones out there, right? So
I do think that since mid-end September, quite a few people have gone out of that carry trade, being a little bit taken by surprise by the Banxico move, but all in all, with Mexico keeping the rates unchanged, 11.25, Mexico still being the U.S. neighbor, but risk really got the better of the mix in the past couple of sessions. So we need to see whether we break through those highs or not. It's a pretty clear level, right? If you start breaking in the EURMXN above 1910, it's no use to fight the dragon there.
Yeah, this is obviously the key level. So awesome. Well, I know you and I are scalping around that bad boy. So let's hope it continues to pull back here. Dale, what are you thinking about these metals? We finally seeing a little bit of stabilization in silver, gold. I mean, gold's like kind of in between levels. I'm not really too sure what to make of gold. It was trading heavy before it started breaking down, and it's still trading heavy now. What are you making out of these moves in precious metals? Do you believe them?
For a bounce and then one more flush. I still think we'll see 1800, but we could rally back to the breakdown 1860. And still this could not be possibly be the low.
So when we stop in between like levels and we don't have any fortified support or resistance that has my attention that I can find, I really get nervous about any type of recovery. So like when
Correction in the dollar, bounce in the metals.
yeah,
After the dollar pullbacks over, and you know it could be kind of deep. Dollar, you pull up your weekly, could pull back to 104.5.
yeah. I mean,
Look at those moving averages right there, and it
yeah,
still would be a breakout, right? Wouldn't negate it.
yeah.
make a
Well,
push
I
to
don't know, but I
109.
mean, so I would look at, I wouldn't want it if I was like a dollar bull. I definitely wouldn't want it back below this
Right,
this
104.
channel. Yeah,
Yeah,
like 104. I
that's what I
guess
said,
it
yeah.
could. That would be that kind of pullback would put the S&P probably back at like 4,400, I would
Right.
think.
Yeah.
Somewhere in that neighborhood. So yeah, it'll be interesting. There's a lot of work to be done, and I think a lot of recovery in and a lot of pulling back in yields. I mean, this has been you talk about the dollar wrecking ball. Where else do we have the wrecking ball is the bond market. I mean, look at the 30-year. We are, just absolutely crapping the bed. Obviously a little oversold. We might have a couple days of worth of a recovery. Here's a 10-year nearing channel support, 127% extension of literally the 2022-23 range. We're just around the 127% extension of that entire range. So
A lot of shorts in there, man.
there are, I mean, it is one of the most aggressive positions in the market, if I'm not mistaken. So
Yeah.
the short bond market right now. So anyway, yeah, this is going to be, we need to see a massive recovery here in the bond market for me to be too bearish the dollar.
What do you
Ryan,
guys think about this emergency test we're having today?
Huh?
The emergency test we're having today.
Emergency test?
Yeah, on our phones.
Oh, I don't even know about that. I have no idea.
There's going to be so many Americans panicking that don't know. They're all going to think the world's ending.
Yeah.
Yeah,
We had it here in the UK a couple of months ago.
Yeah, I didn't. I
think
just remember the one that went off
o'clock.
in Hawaii that wasn't really anything. That's the one I always think about. But yeah, I had no idea. So
All right.
let's Ryan, what are you thinking here? I mean, is this a sustainable recovery in the market? Are we going to be able to see some sort of recovery in the market and see the dollar stabilize, after just rip roaring for 12 weeks? Or do you think we're going to see a continuation and the S&P is just about ready to crap the bed? What's your call here?
Trust the levels. We tested your big 42. It's held your big 42.
Yeah.
There's your marker. It doesn't matter what I think, it's how I trade it that matters. And your 42 is a number. Now we've had a bounce.
Love that guy.
If we come back to 42 pretty quickly, you're going to be worried about that 42 holding again. You want to see a strong bounce. You want to see the level holding and taking back some of the other levels it's broken down through. If you can't do that, then it looks like a dead cat bounce, and then maybe you're going to get further downside. So has the dollar turned a corner? I don't know yet. I think it's too early. You can't call a flip on after, look at cable, look at euro dollar. We've had months of these moves. You can't call that a pullback. Same in that dollar index. Look, it's been one way since July. Is this it's until that's why fibs are important. You look at that. Unless we start getting back down to the 38.2 fib of that July move up, we're in trend and there's no reason to change the trend. But what you'll look for is if you start getting more tops in play around that 107 level, 107.20s. You get a couple more tests and holds up there, then you get a bit of confidence that you have got a top, and maybe then you see a deeper dip.
Well, you guys, talking about, is this really a top in the dollar? And I think it's going to come down to this employment data, and we have S&P, we have the PMI services data today. Everybody's going to be looking at prices and employment inside of the services data that you can see it right here. you know, on the platform. Kman, what do you think? Do you think that this employment data, do we believe ADP? I mean, the ADP is showing us some
I said
weak
in the room, I
data.
think the ISM services will be more important.
Yeah.
I still think so. And then I know that everybody looks at prices, but you also know my view. I think the employment index is going to be more important than the prices. And we've seen it over the past couple of data already, that even when prices go down, but the employment index creeps back up, that the dollar still gets a bit afterwards. And that, I think, is going to be the story of this week, because we've got more employment data tomorrow, and then the cherry on the pie with the NFPs. And if somebody wants to, I don't know how you call it, like swing trade or make a more medium term than the next 15 minutes or 2 hours moves decision, I reckon you need to wait for the labor report on Friday. But yeah, in the meantime, this is some, how shall I say, yeah, setback, pullback, consolidation. Look, it looked to be a bit of a panicky move yesterday on those yields as well. They are now calming down, and now we wait for the next catalyst, right?
Right. Yeah. I mean, if this 4 hour, I mean, that was a really nice, you know, obviously Gravestone Doji, bearish outside, you know, candle, and that happened while I was sleeping. Dale was sleeping. We're getting a little bit of follow
just
through
before.
What's that?
Look at the rip, like from the end of September into the start of October. I mean, it's massive. We've done what 35 BPs, 40 BPs in the
almost 40 bips. Yep.
In the tens. I mean, it's people, and I can't say it enough, but people need to realize how much money is there in how much money is floating around in treasuries and in the 10 years. It's if things move by 35, 40 BPs, I mean, portfolios are affected. There's no doubt about it.
Yeah, and this has been the scary thing that we've been discussing, you know, inside of the ForexAnalytix community, has been the acceleration of this move. Now that you're outside of this channel, you know, this is the risk, right? That you start, and we're not there yet, but we could get literally a blow off top, especially if the jobs data is good. And I don't use those terms lightly. If you've been here listening to us for the last 8 years, you know I do not use capitulation or blow off top. I do not use those terms lightly, because I've seen maybe half a dozen of them in, you know, almost 30 years of trading. So, you know, when people, you know, just consistently say blow off tops and, oh, it's capitulation. No. You haven't seen it. Yeah. Unless you're seeing bids and offers crossed and you're seeing, you know, 10% moves intraday, you haven't seen shit. So I'm just calling it and telling you the way it is. If you see something that starts like this and it accelerates like this intraday and then comes down intraday, that is a capitulation, and we're marching towards that type of move right now. And that's scary when you talk about the amount of money that changes hands in the most liquid market in the world, like which not is just FX. I'm talking the bond market, which is the most, you know, the U.S. Treasuries and the U.S. Fixed income market, which happens to be where most money is sitting at any given time. You start to see rapid accelerations like this and decelerations, you will get a blow off top, and it will make ripples across, you know, or waves across every market out there. Dale, how many capitulations have you seen in the market?
I don't know. I have to get my calculator.
Not many though, right? There just aren't.
Yeah, plenty of. I've seen plenty of parabolic moves both ways, parabolic and waterfall.
Well, we you know, when you see generational moves, they're those generational capitulation type moves just aren't that common because they're generational. Yeah, I still think about the dollar CAD when it triggered those lows at 88 cents way back in 2000. Was it? I have to go back out here, right here, 2007, right there around that or I guess it was 90. It was, I thought it marked up 88 cents at the time. On my bids, maybe it did on my feed, because this is Oanda, way back when. But if you were with FXCM, then that was a generational low. And you know, those types of capitulation moves you just don't see that often. So anyway, big moves in the market that we need to be monitoring. I know you have an interview coming up, and today we have the ISM data. I think you guys got to be really on the lookout for that. Ryan, Kman, thank you guys for being here. And if you guys are not listening to the Flow Show in the morning, well, in European hours, make sure you're listening to the Flow Show every day.
Yeah. And don't forget, we've also got our NFP competition up and running. I've put the link in the chat there. Ooh. So if you're thinking, waiting for the ADP to make your guess, now's your time. Get guessing.
Well, there you go.
Okay.
Here's the non-farm payroll contest. Make sure you guys respond to this specific tweet. This tweet, not to anybody else's, to this one right here, and put your guesses in. Well, now that we got this ADP out of the way, Kman, what are you going to do? Because I'm going to do it within 1,000 of you.
I've got over. I was the first one to put in my. Oh no, the second one I see.
Okay, all right. I'm coming in. I'm
at 111.
111.
Which is going to be a number where most of the market won't know what to do with.
Yeah, exactly. If we get 111,000, the market's going to go, what do we do with that data?
Yeah, exactly. Too good, too bad, not good enough to get all excited.
Right. All right.
Have a good day, guys.
Yeah, have a great day. Dale, have a good one, and have a great interview.
Yeah, I need some help promoting them. It's not letting me do it. And I want to thank Kman for doing his gumshoe work, for going out there and checking all the sources to, tell us what happened yesterday, or at least his best guess. And Ryan, thanks, and Blake, thanks. So could help me promote Chris. I don't have control.
Well, he's got two. I see him here twice. So let's try. I'll try promoting both. Let's see what happens.
Okay. There
Chris should be here. All right.
Got it. Thanks, Blake.
All right, guys. Have a great one. And have a great day. Chris, welcome to the show.
Hey, Blake. How's it going, sir?
Good. Good to see you, buddy.
Hi, Chris. Welcome back.
Coach, how are you?
Doing pretty good, buddy. So what do you have for us today? I see you're putting together video courses. You're getting involved in education pretty heavily. Am I reading your flow right?
You are correct. Yeah. Mostly systems. And I at my site, planatetraining.com. I have systems that I trade. I'm a systems trader. There's my screen. So you guys have it.
Okay. I see it. And all of this is automated.
I manually execute all my systems. They're very easy to code if you can code. But yeah, all my systems are all systematic. You just, if this, then that happens, and you don't try to, guess what's going to happen. But it is always nice to have I guess something to look at, and kind of have an idea. I'll start off with, as you're saying, free newsletter, planatetraining.com. You go to my website, sign up. I write there when something needs to be written, not just because it's a Monday or a Thursday or something, but when something needs to be written about the market, that's when I go ahead and put that out.
What needs to be written about today? The way S&P's held 4,200 and are recovering, and NASDAQ,
you say it. Yeah, you're right. It was an eventful one. I'll start with what I typically look at for a major market bottom or a crash happening. We're in the we're in the kill zone of that. We're in the area where something could happen. And the way I look at that is at the S&P 500 index on a weekly basis. The bottom of my chart here is the NYSE advancing issues 1 week. So a weekly chart of that. And
Okay.
it's the 10-day moving average. So it's a kind of a lot to say, but this is what the actual data looks like. And so I just quiet it down with the 10-day average. And this area down in here, when we get below the 1200 area, is what I like to say crash mode is available and capitulation is in order.
Okay.
And the last time we were there was in October of 2022. So September and October of 2022 down in, we got there, and that's where the bottom happened. You can see on the SP 500.
Interesting. Yeah.
Yeah.
And then the reading we have now is equal to the one we had in March at the 3,800 level, right?
Absolutely. Yeah.
So it's already there, but the S&Ps aren't at 3,800 yet.
Correct. And
Okay.
and we are at a 50-week moving average on the S&P 500. And yesterday, as probably most people know, we hit 42, the 4221 cash gap.
Yeah.
On SPX. A lot of people were watching.
So is
that
this Custer's last stand here? The market makes an attempt to hold here. A lot of people are still pretty bullish, Chris, saying that this was a pause to refresh, a little ABC 3 waves into, seasonal October low, and when the lows are in, we're just going to blow to new highs. Are you hearing that narrative? Huh?
So this is an analog of the Q3, Q4 on the S&P chart I have up here. And the analog would have us bottoming here. I'm colorblind, so I'm assuming this is yellow. These are yellow. They could be green.
Yeah.
We should be bottoming in this area right over here, September, October. Last year, of course, we bottomed later in October. So if we're going seasonality, this is what it would start to
right
look
now.
like.
It's saying October 23rd on the bottom for the low, right?
And that's this one would say September 27th. What you're looking at is 23rd, the year 2023.
October 2nd. Yeah, all right, I got it.
There you go. I don't know that I'm not gonna give a date. We need to say this is where something should happen. Let's pay attention to see if it does happen, and watch how things move. What I have here is the volume weighted average price VWAP from the October low and from the 2022 first day of 2022. So
Okay.
2022 high.
Look at all that confluence there. It better hold.
Happen. And then, of course, if we look at the volume profile, so volume profile measures how much volume was traded at a certain price, not time, which is on the bottom here. Same thing. And that would be and so the point of control is the highest volume node of that period. And so that is from this is the 2023, this year's volume profile. So only this year. But yeah, as you're saying, a lot of confluence happened right in this area here.
Okay. So the market makes a stand. I know, that you make things systematic. You may be discretionary about your systematic signals. What's your trader's intuition tell you about this? Mine is saying it's a hope low. Maybe I'm talking my book, but I still don't think we've had a capitulation. I think we need a 30 plus VIX for a better bottom.
I'm gonna bring up one other one here that I think this is running the show right now. This is the 30-year bond.
Okay.
And I don't disagree with what you're saying at all.
I can't be bearish of bonds down here. It's everyone is. Huge short position. Is it possible that the bonds could rally and the dollar pull back a little bit but the market still goes south? Or is it, I
Everything's
mean,
possible
everyone
for
thinks
sure.
it's a given that yields come down and the market blows. It's going to be interesting to see.
I mean,
I thought that would generate a bond rally. Risk off was what I was looking for a bond rally.
yeah. I mean, as you know, like we all know here, well, not everybody knows here, but bonds have never been important really, until they become important, right? They're just very much taken for granted, and we just go along our day and everything happens. And suddenly when rates just start doing what they're doing and things start moving, everybody gets it. You know, you look at the housing market, you can certainly see that whatever, 2 years ago, the inventory was non-existent in the United States. And I live here in Blake's neighborhood, in Phoenix, Arizona, where you couldn't find a house 2 years ago. Now you can find as many houses as you want. But nobody's getting rid of the houses that they're living in because they locked in those rates. So, rates are super important. What I have here is, this is the 30-year bond, and back to the volume profile. A lot of people look for gaps in price to be a target because they're targets for some reason. But what I find is gaps in prices are important when there's no volume traded at those levels. So sometimes you can have like a CPI print that gaps a price up and there was nothing traded there. That happened in June on the indices. This is a gap we can see all the way back from August 2011. If you recall what happened in August of 2011, the US debt was downgraded and rates
and then
gapped.
we had a tremendous rally.
And we hadn't seen that price for 12 years, right?
Mm-hmm.
The last time we came back to see it was in 2014. We bounced off those lows yesterday. 109.01. We got down to 109 in 20-30 seconds. So I guess that's 10/16, 5/8.
Would you buy TLT here?
TLT is
or the notes? Would you buy bond? I think the notes have a better looking chart pattern than the bonds. The shorter end of the curve, the break wasn't as deep. Well, that's yeah.
Okay. So we have a similar. Where's my? I'm going to go to, let's just go to, sure, all time. See if it'll show up for us. Here we go. So 10-year hasn't fully done it, but it is in there. So we've unlike
so they've held up better because they haven't retraced as much as the long end.
The long end has not gotten into that area yet, whereas well, it has there, but it has gotten into that area on the 10s, which is really nice. I'm gonna bring one other one up here, which is the NASDAQ, which is my realm. We also had a gap from the June CPI.
Okay.
And the only reason I show that is important is this gap has been touched twice. Overnight it got it tonight. Okay. Last week it got it. And I'll juxtapose that. Big word, I know. Good job, Chris. Sound important there.
Congratulations.
This is S&P's June gap and go. So we're well below it on S&P.
Yeah.
Thanks, Richard.
Yeah.
Juxtaposition. And so we're well below it on S&P. We're well below it on Dow, but the NASDAQ has not been able to get fully in there. And to really answer your question, which is, are you looking to do something in this area? The only thing I have to say here is if this doesn't fill out and we take off, that's going to tell me that that's the market telling me that at least on the NASDAQ side, it is in control and it is heading this is what we need to pay attention to. If this, I am expecting this to get filled out. I'm expecting that volume to get filled out, at least down to the bottom end, before a turnaround happens. So the if this then that is, if we take off from here, we're going to leave a lot of people who are waiting for this sort of gap area to get filled. We're going to leave them in the dust, and they're going to have to chase. I'm happy to wait for better information. Personally, with better information, we get better resolution. We can, if I know 80% chance that we're going to do something, I would rather do that than a 20% chance, and I'll pay for that happily, because I'll put size on as opposed to catching bottom tick. That's my
okay. Can I offer just a look if you go back to the beginning of the year on your chart and keep the whole chart in there?
Yeah, this is 2023. If you can.
All right. So draw a trend line off the Jan low and then the March low and take it all the way up.
Oh, buddy. Yep.
Yeah, and you have a little more room you could on the March low. You have the last couple days highs tagging
Yeah, you do.
the breakdown. Anyway, there's just another look for you to consider.
Absolutely. So let's
we give and take, right?
Well, the way I look
share
at this,
we're brainstorming here, Chris.
if we get back into it up into this area, so this is another low volume node here. It's not a zero, it's not a gap, but it's a low volume node. So this range here would be, let's just, what would be the most frustrating thing in the world? Go up to the top of that range, go down to this one, go up to the top, and not resolve anything, and not do a Q4 like everybody thinks it's going to be.
Yeah. Most people think Q4 is going to be what? Bullish, right?
Right. Except for 2018, we have a lot of examples of it being
seasonally real bullish time frame. Okay.
Yep.
Just taking the temperature. Do you follow metals? We've had a real big decline, and particularly silver. Do you follow them at all? I mean,
you bet.
Okay.
You bet. In fact, the last time we were on a phone call, there was a big gold rally as you and I were chatting, and I was able to put the trade on.
Okay.
I think it was, so it would have been like it would have been June, I think, was the last time we spoke. So there was just a big gold rally that day. So I'm always, I'm certainly happy to chat about metals with you.
All right. So we almost hit that yellow line again, right?
That is we are looking at this century's volume profile.
Wow. The whole
so if we
century.
want to, we could go to all of existence of the future contract, and it's the same area, 20 or
50,
so,
20, 30, 20, 40. Okay.
Yeah, that's the
we got pretty close, 2060 the other day.
Yeah.
Okay.
So we're looking at with the 2023 low, March 2023 low is 2685.
Yeah.
And we got to 2870.
Close enough for government work.
Yeah. Your trend line obviously is the next chance up here. This one broke, right?
Yeah.
I'm sure you're watching that one.
Okay.
But
just curious, how about the dollar? Dollar's been pretty relentless. 12 weeks in a row to the upside. Now there's a trend. Right?
You bet. The thing about currencies is by design, as unlike indices and everything else, right? Indices, you kick out the worst performing companies and you put in the best performing companies. So they're just built to go up. If they're not going up, something's not doing what it should be doing. Currencies, on the other hand, and Argentina does not believe this is true, but you don't want your currency to go rip roaring, hyperinflation. And by design, they're mostly mean reverting. So when they get going in a trend, you can absolutely bet that the world is going to feel it, especially if it's the world's reserve currency, right? So let me get that 1 week that you were looking at. Wow. Yeah. So
they say FX is from a long time ago, one of the best trending markets out there.
It used to
this
be.
is certainly an example.
Yeah, it's when they trend, they're amazing because of that exact reason.
Yeah,
yeah. When they're
so
built
all the
to
money
mean
you
revert.
lost. So if you're bullish down there, and I'm talking about myself, every once in a while I'd be successful trading counter trend, but that's where I gave some back too, trading counter trend, when all you had to do is just sit, which is the hardest thing for people to do.
If we could just sit, just sit and wait for the fat pitch, we would be
what do you think is the next fat pitch as we begin the fourth quarter?
As we get into for me, it's as we were looking on the NASDAQ, I want to see this and the indices, if they're gonna head up, I want I don't think it's gonna I don't know what happened overnight that we got such a rally today.
Well, we had some news that they liked. It was a week. What was it? Jolts? May have been
we got Jolts was yesterday, I think, right? So we had ADP this morning, but this happened at midnight Pacific time. So 3 a.m.
It turned last night in Asia, didn't it?
Yeah.
Or Europe. Yeah.
Yeah. And I don't know what it was, because
2-day delayed reaction to the full moon. I don't know. Anyway, but I feel
DOJ definitely not doing anything.
Yeah. But I get the vibe that your bias is to look for a buy signal. I'm
always on the buy side when it comes to equity indices. I will short, no problem. I'm happy to do it, but because they're built to go higher, and the every bank that exists out there that is important in the market has a lot of room to cut rates when they need to. I know that any rate cut out there, at least in the top currencies of the world, would probably be a reaction to something that needed to happen, right? Nobody's like, Jerry's not going to just come in and say, we're going to cut 25 or 50 right now. Not doing anything just means that when something bad happens, because look, I don't know, man, I've been in this game for 20 something years at least. And I'm still a youngin'. But I've never seen them cut rates as aggressively when unless something really bad happens. They'll sit on rates and earn that revenue that they need as long as they can. I've been looking for 4,200 long time. I talked about it when it was well above it. I thought it would be a battleground. So far it held. I see all the confluence there, and just a vibe in me. Maybe people say, well, Dale, you're always bearish, but I'm not always bearish. But it seems too textbook to me. I think it's, we could launch a rally back to, 4,400. Totally. That'd be a sell for me if that happened, but I don't even know if it's going to do that. I think it's a hope low at 4,200. We'll see. Everyone's buying it here. That's the thing, right? That's the thing.
Was looking to buy at 4,200. So they got their chance last night. Let's see how long it lasts. That's where my head's at.
I'm with you. We haven't seen anything that I don't know. Maybe kicking the speaker out was a moment. Could have been. That's the thing. Like some people absolutely know it is, a moment to do things, and I sit here and going like, oh, that's what you guys. Oh, all right. So
Yeah.
I wait for a lot more information to. I just wait for the easier ones, and at the moment, I don't really have anything easy.
You know, I tell you what, sitting and waiting and less is more. Okay, if everyone just got that, unless you just want to make your broker happy, less is more. And anyway, I agree. So if you find that you're hunting for a trade, you should probably turn off your platform, because don't the good trades hit you right in the face and you see them?
You see them, and you can see them a week later.
Yeah, you see them coming, and you get ready for them. So, what's the best way for people that want to reach out to you, Chris, for them to do it? On Twitter, at your website? If you want to show your website, go ahead and do that now.
Both work for me. PollinatedTrading.com. This is a free newsletter. You can just go and join, and I put my insights out there when they exist, not just because it's look at that good looking guy. Humble.
It's getting older.
He's
Look who's talking, right? Anyway, go ahead.
So
pollinate. I like that, pollinate. Are all the bees dying, Chris?
Oh, they're well, man, I'm the optimist here. So
all right.
I don't think so.
All right. Well, you keep pollinating and flying from flower to flower and sharing your knowledge with people. And I hope you have a bountiful garden with all your efforts.
I appreciate you. Thank you so much.
All right, Chris Stover, everybody. Follow him and go to his website. Chris is a warrior.
Thank you, Dale. It's great chatting with you again.
All right, buddy. I have a great fall trading season. Chris
you
Stover,
well.
everyone. You could, find Chris on his handle. He tweets when he sees things, or I've seen him teach on Twitter by directing people to, learn about what they're doing. Follow him at Chris D Macro. And that's a wrap, everyone. You could join the team in, about 18 minutes there. Chris put it up. And don't just count your pips, count your blessings. We'll see if 4,200 is a magic number. And I don't even know where all the markets are at right now, because I've been talking to my trading warrior brother, Chris. So good hunting out there, everyone. See you tomorrow for Thrashing Thursday. Adios. Thanks, Chris.
All right, Dale. Thank you, sir. Bye.
Adios.
Adios, sir.